So yeah, it obviously depends on whether you are buying or selling. And the way that we apply it is nice and simple. It's just, if you're selling, you want to go in the direction of the trend. So you're expecting
Yes.
it to come down, so you want to go top to bottom. If you're buying, we do the complete opposite. You obviously want it to come up, so you go bottom to top and drag it up. So there's a number of ways you can apply it, and it's applicable across, you'll see it be respected across all time frames. Doesn't matter whether you're looking at the month view, the day view, or whether you're looking at the 5 minute, the 15-minute view. So if we look, for example, let's jump into the month view. So we can see we've got a high here, and we've got a low here, and we've got pullbacks here. Now, the three levels that we're interested in for pullbacks are the ones that I've got in different color. So the 61, the 50, and the 38. They are the three, they're what's classed as the golden ratio. So if you get a pullback and a rejection of one of those levels, you're likely to see a continuation of trend. So if we were to apply the fib from the high here to the low, I wouldn't mind betting that this level has probably pulled back to one of our levels. So if we look, the first ones, see how the 3.8 level is being respected?
Yeah.
And then we've punched up to the 50 and then continued our move down. So this is the month view. So in the month view, it is being respected. Okay, so that's across that move. We can then even, if we look at, let's say, this low to this high, this will be a pullback to a fib retracement level. So we want to go right from the low, which is going to be there, to the high point, which is going to be there. And notice how, again, the 3.8 level, it's pulled back to that 3.8 level and then continued to move. So the 3.8 level has been our level of pullback, or our level of interest, if you like. We've seen a rejection at that level. We've got a nice bullish engulfing candle form. Once it's pulled back on that bullish engulfing candle, it's then continued to move to the upside. So in the month view, it is relevant. If we then jump into, let's say, the 5 minute view, so we're going to go to the extremity, and I've never tested this, so I could end up looking like a complete idiot because I don't use the 5 minute view. I don't really see the point in it. But if we say we've got this high to this low and a pullback here. Now, obviously, we've got a trend line here. This trend line's taken in the day view, so we know that this is a relevant trend line. I've not moved that. That is literally how much it has respected that trend line. It's pulled through it, it's pulled back, and then it's just dropped away. But if we go from the high to the low, it's respected the 61.
Yeah.
So it's still within those three levels that we're seeing that it comes down, it drops, and actually that could be slightly tidier. It's punched up, it's hit that 61. The moment it's hit that 61 level, it's punched back down. And then not only is it punched back down, but then when it's done another pullback, it's come back to the 3.8 level again. So it's struggled at the 3.8. The 50 level has done sweet fuck all, to be perfectly honest. It's punched straight through that. It's gone to the 61. It's punched straight back through the 50 level, back through the 3.8, and then come back and hooked back to the 3.8 before it's continued its move down. So it's relevant in the month view and it's relevant in the 5 minute view, because the algorithms in which Forex run are massively respected across Fibonacci. But it is very, very important, mate, that you understand that what we never do, never, we never just look at a trend like here, we've got a drop down. We never want to just take the high, find the low. We can see again that we've potentially rejected this 3.8 level. We've got a bearish engulfing. So this could well be the continuation, and we're then going to see it continue to move down. But it is very, very important that we never just apply a fib to a trend and take a trade solely based on a pullback to a fib level. We must always, always, always incorporate it with some other form of analysis. So be that a pattern. So here we've got a trend line, a nice, clear, established trend line. We have broken through this trend line, and in doing so, we have formed this double top.
Double top, yeah.
Okay, so we've got our neckline here. So all the while we are pushing up, we can see that we are creating highs, highs. Let me lock that. Highs, highs, highs. So these are higher highs, yeah? So our point to break, to be able to then see that it's potentially going to reverse, is this level, because this is the previous high. So if we can then come back and see that our price is going to hook back, this is our new high. So we are no longer seeing higher highs. We're seeing lower highs.
Low, yeah.
And lower lows, exactly that, because we've got a low here. Our lows are moving up. Excuse me, our lows are moving up across this trend. However, when we get to here, if we see a pullback to this level and a drop, this is no longer going to be showing that we're seeing higher lows and higher highs. It's now going to be showing lower highs and lower lows. That's just another way of looking at this double top. What we're really interested in is, what is this trend line doing? Is it established? We've got 1 tap, 2 tap, 3 taps, 4 taps, 5 taps, break. Once we've broken, is it still respected? Well, it's hooked right back. If we look at this pin bar candle, it has pulled right back, tapped our trend line, and then gone. So if we then zoom right into that, okay, so let's take it back to, none of this data is here. So has this high to low, has this respected a fib level? It's punched up to that 61, rejected our trend line, rejected the 61 level, and then continued to move down. So do you see how I'm not taking a trade based on the fib level, but the fib level is being used in confluence with a pattern or a trend or a break of a level or a movement in the actual trend itself. And then once we actually look at everything else that comes with it, we're then obviously confirming that trend. This is where the MACD can come in. If this is a genuine move to the upside, then why are we seeing much, much, much less buyers in the market?
Yeah.
So this is now partial divergence as well as a break of a trend. So the break of the trend here, the pullback to the trend, the pullback to the fib level, a bearish engulfing candle, and a potential pattern. Remember, these patterns are only ever potential until they take this neckline out. Okay, so when the price is, let's say we're on this big bear candle here, yeah? But let's say we've only seen it move down to here. So we haven't seen any of this price action form yet. This is only potential. This only becomes a confirmed double top when we see the price break through that neckline and hook back. So at the moment, if we want to apply a fib retracement to this price action itself, it's going to be very difficult to do so. Why do you think it's difficult for me to apply a fib retracement to this?
Because you don't have too much information yet.
We don't know where the low sits. So we haven't even started to see a pullback yet. So this candle could close here and then pull back. It could close here and then pull back. It could close all the way down here and then pull back. So without knowing where that pullback level comes from, it's very difficult for us to apply this fib.
Yeah.
But what we can see is that there is a level here. So there's a good chance, or there's potential, that this candle will close on this level. And we will then start to see a pullback to the neckline. So we can then apply a fib. If that happens, we can then apply a fib from the high of this move to where we potentially think it's going to stop. And we can see that our neckline ties in with this 3/8 level. So we know that if we do reject here and we start to see a pullback, we then want to jump into a lower time frame and look for a rejection at this level to sell again. And then once we've made this move, we can either drag our fib down and continue to look for the next level that we're potentially going to retrace from, or we can take it from the high to the low move down again. And we can then, when we start to see a pullback, see, is there a relevant level? Yes, there is. Can we look for a rejection here again? But what we then need to do, excuse me, to be able to ensure that this is still good to trade, what we need to know is, where are the targets for this? Because there's no point in adding fucking sells down here if the targets for this trade sit here. By the time you get here, you don't want to be adding more sells. You want to be looking at closing your sells. So what we need to do to apply the fib extension. So the fib extension works exactly the same as the fib retracement. Okay, so there's no need to get confused with it. The only difference I have done is I have removed every other level. So I've double clicked it, I've gone into style, and I have unchecked everything apart from the 0, the 1,
and 658.
and the 1618. Because otherwise, it looks like you're putting a fucking unicorn rainbow on your chart. It looks ridiculous. The amount of noise it adds is phenomenal. And not only that, all these other levels, when you start to approach these levels, you're going to wonder whether you're going to see a rejection and you're going to think, shit, I need to close. As where from my back testing methods, all we need to worry about is the 1, providing we're going to take some profit here and not get greedy, and we're going to stick to our rules. And then the 1618. When you hit the 1618, we bail. You take what you've got. At worst case scenario, you leave 5% running in case it wants to carry on moving. But the way that we apply this is exactly the same as what we've done with the fib retracement. So the fib retracement, we're applying from high to low or low to high. Okay, so it's 2 clicks. The fib extension, we're doing the same. If we're looking to buy, we're going to go low to high. And the 3rd click is our point of pullback. So the way that this works is the first 2 clicks decide the actual depth of the Fibonacci itself. Okay? The 3rd click decides where those levels actually sit. Does that make sense?
Yes.
I understand this is a lot to take in, so I will send you this recording.
Okay.
So what we want to do is we need to know the high of our double top. So we want to find the highest point, which is our left shoulder. And we want to find our low, which is obviously this neckline. We're not interested in this at the moment, okay? And for us to really find the targets for this, at the moment, we're having to make an assumption. And in a second, you'll understand why. So the first click, because we're looking to sell. So just a minute ago when we applied that fib, we were looking to buy. So we go low, high, retrace. So our fib sits up. If we're looking to sell, we go high, low, retrace. And now it sits below. So what we want to do is take our high, so there, our low here, and now we're having to make an assumption to our point of retrace. Okay, if we retrace to here and then go down, I will still bring my fib to here. So if it doesn't retrace fully, I still bring my fib up as if we have retraced fully, okay? If we see a stronger retrace, so let's say we retrace up here, I will bring my fib up with it, because we always want to be conservative in finding our targets. We don't want to overshoot. So let's say that we see a retrace to the full rejection level of our neckline. So let's say that we see a retrace to here. Even if we don't and we move down, that's fine. It's not a problem. But So this is the 4-hour view, yeah? So that's given us a first target to take some profit here. It's giving us a final target to close off of this double top of here. Well, where does that level sit? Well, we've got a trend line here. So what is that trend line? So the targets for that double top sit bang on this trend line.
Wow.
Does that make sense?
Yeah.
Now, we can also, there's a more simple way, but I wouldn't recommend it because simple is not always best and it's not going to give you the most amount of pips, to be perfectly honest. But another way to find targets on these, a more simple way, if you're really struggling with getting the fib on in time, and let's just say I don't manage to get back to you in time before you open the trade, another way that you can find targets is take the high point of the pattern to the low point of the neckline, okay? And then move that across from the neckline and project it down.
Oh. Okay.
So that would give you a target of here.
It's very similar like the Fibonacci.
Say that again.
It's very similar like the
Very similar. It's just slightly higher up.
Yeah, yeah.
Yeah, it's just a little bit higher up. But then what we can do is, so trends as well. So this high to this low, yeah? Let's apply a fib retracement. This only works if it's respected a fib retracement level. So, and it doesn't always, sometimes it overshoots. And this might show you why we take profits at the 1 level fib. So we've got a high to a low to a retrace, yeah? Retrace rejected at the 61 and then continued its way down, yeah?
Yeah.
So we can now apply to find targets, not of a pattern, but of the trend itself. So I think this, personally, I think this is going to overshoot, but let's have a look. So we want to find out where this trend is going to exhaust, because this is clearly a downward trend, yeah? You agree? We've got the high,
Yes.
the low, the high, and then we can even see, I mean, obviously you're not going to have the benefit of this. With hindsight, it's great that we can see that we see some lower lows form. With hindsight, you're not necessarily going to have that. But what we want to do is apply from the high to the low to the point of retrace. And then where does our 1618 sit? It's much further down. But this is why we take some profits at the 1 level fib and go risk-free. So now can we look at a bigger picture? So we've got a high and a low. And we've got what appears to be a lower high forming here. So now what we want to do is see, has this respected a fib level? So high. No, it's punched just above that 61. Which is fine. It just means I wouldn't now be able to apply a fib if we see that this continues on its merry way down, which it may well do. We then couldn't apply a fib from here to here to here because it's not going to give us anything relevant worth knowing. Not only that, if we actually then condense it up in this kind of view, we can see that actually right now, this pair appears to be trapped in some form of range.
Yeah.
That ideally it needs to break out of. So if we then
Sorry.
But as I say, that can be The problem with fibs is they can be manipulated to whatever you want. So it's really important that you carry out analysis and find patterns first, because as I say, I cannot reiterate enough, what I don't want you to do is just slap a fib on a move and say, oh, okay, it's going to retrace to the 3.8 and go. That level needs to tie in with something that's within the analysis. So like,
do you mean like flags or double top or
anything at all?
Okay.
So like here, I'm using it on a channel break. So CHF JPY, we've got a break of a channel, and we're starting to see a pullback, and it's sat right on our 61 at the moment. That's our 618 level. So we need it, but notice how the levels are being respected. So the 38, it rejected, then punched straight through. Once it punched through, it rejected off the 61 and bounced off the 38, and then went up back to the 61. So my invalidation level and my entry is all the way up here. My entry is actually about there. So I've got just enough in this, and I've already taken some profit on it as well, so I'm not going to lose money. I've got just enough in this to hold this in this space and see if it wants to reject the channel bottom, if it's going to push that far. And if it doesn't and it closes back inside the channel, I'm out the trade.
Okay.
But then if it does, so let's say we do get a rejection here, and we start to see that later today we've moved back down here, we can then apply a fib. So we can apply a fib to a channel, a double top, a double bottom. We can apply a fib to whatever the fuck we like. Okay, it's just knowing what is relevant and what is not. So if we're going to apply it to this trend here, so the high, the low, and this is potential, remember, because we haven't seen a rejection yet. But let's just say, for argument's sake, this is going to reject here, just for ease of being able to explain it. So we want to go the high, the low, the retrace.
Rejection.
So that gives us, the targets for that. So the 1290, we said about that 3 weeks ago. Our first target is sat on that 1290 level. Our 1618 is sat just above that level of support. So now what I'd be really interested to see is, where do the targets for this channel lie in correlation to these targets? And they might not be the same, but I'm always interested to know. So what we need to know for finding the targets of a channel is, let me show you on a chart I'm not using actually. In fact, I'll use GJ because I'll be looking at that later on. So let's go for Euro CHF, because that's a shit pair that no one ever trades. I've never bought this pair in my life. Let me show you why. That's the month view. Why the fuck would anyone buy that?
Yeah, it looks very strange.
It's just done nothing but drop off a cliff. So when we're applying a fib to a channel, so we've got an ascending channel and we've got a descending channel. So it was you that sent me one the other day, wasn't it, about the GBP USD with the ascending channel, and you were looking to buy?
Yeah.
Yeah. Okay. So if we've got an ascending channel like this, I'm only interested in a break and a hook back to sell. If we've got a channel like this, I'm only interested in the break above to buy. So if we see this break above, hook and go, I'm not interested in buying here. And if we see this break below, hook and go, I'm not interested in selling here. I'm only interested in taking counter, because this shows us price manipulation to the upside to make way for a big sell-off. This shows us price manipulation to the downside to make way for a big buy and a big bull run. If you wanted to buy something, would you make it more expensive or cheaper?
Cheaper, no?
And exactly. And if you wanted to sell something, would you make it more expensive or cheaper?
No, more expensive.
Exactly. And this is exactly what we see the banks doing with the market. They know they want to sell this currency pair. So why are they going to sell here at this price when they can manipulate the price up, trap loads of people, and then sell here? And it's exactly the same on this channel. But for us to be able to work out targets on a channel, we need to understand. Now, you are never going to get a channel that forms this perfectly. Okay, it's just not going to happen. I'm well aware of that. But let's just say that you do. To be able to find the targets on that, and then we'll do this one as well. So to be able to find targets, what we need to understand is just the first wave into the channel and the retrace. What is going to find us our targets is the depth of the channel. Okay, so the physical, fuck's sake, the physical depth of this channel itself is realistically what is going to determine how much of a sell-off or a bull run there is. Now, when I say we want to know the wave one, so wave one on this is obviously we've moved into the channel, we have rejected here, we've punched up and rejected here. This is our first wave, okay, and this is our point of retrace. For this one, we've pulled into the channel, we've rejected, we've punched up. This is our first wave.
That was what I didn't know when you said
Yeah.
when you said the first wave. I didn't know how to.
But we're always
but
better.
now-
So there's two things we need to remember. Okay, so that would then be the point of retrace. The first thing that we need to remember is if you look at it and you can't find a clear-cut wave pattern, go conservative. So obviously this is going to give bigger targets than if you were to do this. So if you're unsure, use these instead and ignore this, because then it's going to give you a more conservative target. Next, what's very important that we must stick to this, because as I say, it is the channel that decides the targets. If you see that we have moved in and we've got something like that, the rest of the channel, this channel is still valid, isn't it? Because it's been rejected. Yeah. Just because we've got this doesn't invalidate the channel. But what it does mean is when we are applying our FIBS, we are only interested in the parameters of the channel. I'm not putting my click up here because it's going to lead us to overshoot. I'm only interested in the price action that is sat within the channel.
The channel, yeah.
Does that make sense?
Yeah.
Perfect. So if we then come back to this pair that we were looking at, we've applied the fib to our actual trend itself, high-low retrace. If we then apply the fib to this channel, where do you think our clicks should be going? So the first click is going to be the high of wave one. So where do you think I should be putting it?
I cannot show like this. You know, there is the channel, the bottom to the blue. Come down, yes. Put it there one.
Okay.
And after just go up there.
Perfect. So all we've done,
okay.
I completely agree. The only thing we've done wrong is we've got them the wrong way around. So instead we want to go 1, 2. But I think that's bang on, and I totally agree. And then point of retrace, so we move up to where we're likely to see a retrace. So if this sees a full retrace to the channel bottom, the target's sitting exactly the same place. And the fibs, you can see the first one, that's where the clicks are. 1, 2, 3. The second one, the clicks are 1, 2, 3. They're nowhere fucking near each other, but they've given the same targets.
Okay.
Does that make sense?
Yes. So low retracement.
It is a head fuck to get your head around initially, mate. I understand that. Honestly, I don't expect anyone to make sense of this and really, really make a go of it until they've gone. And it takes a lot of practice and a lot of time for you sitting there applying these and physically seeing it for yourself. Because I can understand that initially it probably just looks like I'm slapping a bunch of things randomly wherever I like on a chart. It does work. It's very, very, very effective. Fibonacci levels are massively respective in Forex algorithms. Whether they are respected in stocks and indices, etc., I couldn't comment because it's not something I've tested.
Okay.
But in Forex, they give yeah, it's clear as day. Even, as I say, any time frame you like. Even if we were to jump into like the 1 minute view. Low, high, retrace. So has this retrace respected a fib level? Bang on the 50.
Okay. So I will do practice this one.
So even if you're scalping and you're using much lower time frames, i.e. the 1 minute, the 5 minute, the 15 minute, it's very, very important you have an overall picture of what the higher time frames are showing you and what direction the market is moving in. That is crucial. But then if you wanted to go and apply this stuff in a lower time frame, sure, why not? So even for that move, I mean, it's obviously going to have much smaller targets because retrace. One level fib sits right on that rejection there. And then is there something that's already played out that we can potentially see? So low, high, retrace, yeah?
Yes.
Mm. 1618 sits at this level where the pair has then started to struggle.
Wow.
So it doesn't matter what time frame you're in, what strategy you're looking to trade. All that matters is that we understand how to apply it correctly, because when used incorrectly, it's going to lead you to take stupid fucking trades, mate. I'm not even going to lie. So we're never just going to look at a trend. We're always finding our structure and looking at our price action first and foremost. Always, 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 always. We always need to know exactly what we're looking at there first. That is going to be king, ultimately. If you're ignoring structure and price action and you're just slapping a fib on and hoping that you're going to see a rejection, realistically, we're going to do nothing but lose money. So we find our structure, i.e. our patterns, our trends, our supports, our resistance, our channels. We find all of that stuff. We look at our price action. What are our candle shapes and sizes doing? Where are our highs? Where are our lows? Are we getting wicks form? Is there engulfers? Then, once we've got that picture painted, we can apply a Fibonacci and look at our MACD for confirmation.
Okay, mate.
Got a headache yet?
No, I don't at all. I'm just checking. But I still don't get it. For example, the entry point. When is the best, for example, to enter a trade?
So it depends on what we're talking. So on, say, like a channel like this, the best place to enter is going to be when it hits this channel bottom. And what we want to be doing then is finding a level within the top of the channel that we can invalidate the setup on. So when we get to this channel bottom, okay, we have clearly we've got two levels really, haven't we? So we've got a level here and we've got a level here. Yeah?
Yeah.
So if we hit this channel bottom, we can't use this level to invalidate the setup because we need to kind of hit that level. However, we can use this level. So when we hit here, we know that if we're going to punch past all of these highs, we no longer want to be in the trade. Remember, we're 4-hour view, so you're going to be using much smaller lot sizes trading like this, but there's going to be much more pips to grab on the way down. So let's say we do see a rejection up here, and we know that this is going to be our invalidation level. So we're going to want to go just above that level. So our entry is going to be when we hit the channel bottom, which might need to be moved across because, you know, if we're not in 12 minutes time, the next candle forms. If we haven't hit that level in the next 4 hours, then this needs to come across again and come up. Because obviously the chart moves across as another candle forms. So let's say we're looking at here. So our stop loss is going to need to be about 32 pips. But we've already worked out that our take profit sits just above this level. So am I bothered that my stop loss needs to be 32 pips when there's 228 up for grabs? Am I fucked? I don't care. If anything, what I'm going to do is make that a little bit bigger to hold me in the trade. So now it's 42 pips, but we've got this channel center, so we'll bring it down. We'll say we're nicely above this level. We're then also allowing it to not necessarily reject initially straight away. So once it taps, I'm going to allow it to ride up the channel for a bit. If it's going to continue to ride up the channel all the way up here, we don't want to be in the fucking trade anyway. You want that trade gone and shut. So we've got a 1-to-6 risk reward ratio trade. So now what we need to do is open Stinu, the app, and know what your risk is. So let's say your risk is 2% and you've got a £5,000 account. So we put £5,000, 2% risk, 38 pip stop loss. Select CHFJPY, and it will then tell us what lot size to trade this on. And then we can place a sell order for this level here, 114151.
But you just only open one trade, yeah?
It depends on your personal trading style. So are you able to close partial profits?
Yes.
So if you've got a lot size of 1 on, you can break that up and close, say, a 0.20.
Yes.
Perfect. So if you could do that, not necessarily, it's really up to you. If you wanted to trade a lot, so let's say the 2% that it told you, your 2% risk, for argument's sake, let's say was 0.30. My preference is to place 3 0.10. So we are using exactly the same, but we have broken the trade up. And then that way, when we strike this one level fib, we can, for argument's sake, let's say we close one of those positions and we've secured some profit here. One of the 0.10s is going to have its stop loss move to break even. The other one is going to have its stop loss move to halfway to break even. So if we see a partial reversal, this one's going to be closed out, but this one's going to hold on to the full move. If we see a full reversal, we've closed profit here, here, and lost nothing here. But then when we see this move, if we see this move, so let's say we pull back to there and then we drop down. So we've closed profit here, here. This position's still in because our stop was at break even. And then we come down here. Once we get to this point here, I am looking to close everything. If I've got 0.30 on, we've closed 0.10, 0.10. So we've now only got 0.10 left. When we hit the 1618, realistically, I'm going to be closing 0.08. and just leaving 0.02 to run, and my stop loss is probably going to be brought to this level.
Okay.
Does that all make sense?
Yes.
So we'll see how this one plays out. Could be a good one. Could be a shit one.
I don't know. I don't have any open trade right now, so.
You don't?
Pardon?
You don't?
No, I don't have anything open. Yeah,
It's not a bad thing.
I'm checking only the GBP USD
Okay.
and the Euro GPI.
Okay.
Or yeah, the Japan yen. Yeah, the Japanese yen.
Okay. Well, so I don't want to throw too much at you, if that makes sense. I'd rather you went and had a play with the FIBS. What I would suggest you do is just pick any currency pair you like and just move back and familiarize yourself with these moves. So look where you've seen a trend break. So you've seen a low and you've seen a high, and then you can see you've got this pullback. Slap a fib on there and say, okay, so we've got low, high, retrace. Did it respect a fib level? Yes, it did. It then continued to move. Okay. Am I able to also apply my fib? Does it respect a fib? Yes, it does. It creates a nice level over here. So just go and familiarize yourself with how these levels work and how we can apply it. But what's the point in trying to learn this on a live market and lose money when we've got a shit ton of data back here to be able to play with?
And you can practice, yeah. Okay.
You happy with that?
Yes, I'm happy with that because
You
last time I did the flags.
Yep.
But yeah, I could practice this one as well.
Yep.
Okay.
And that's what it's ultimately, that's what it comes down to, mate. It's just the more you practice this and the more you see it work with your own eyes, the more confidence you're going to have to take trades on it. And it can be, I understand it's fucking madness the first time you can place some trades and you might be given a target that's 300-400 pips away and you think, nah, there's no way that's going to happen. And it does move on and hit your 300-400 pip target. But it's always about staying grounded and realistic. You know, it won't always work. The markets will just flick us the bird and go in the opposite direction. It does happen. So if we were going full margin, slapping crazy leverage on every single trade we take, we're all going to be broke by the end of the week.
Okay.
Taking losses are inevitable with any strategy. But yeah, I hope it's not too much of a head fuck for you. I think that was quite a good session, as I say. If you can just go and practice that stuff.
I will do it. I will do it.
Awesome. All right, buddy.
Okay. And please, if you can send me this one because you promised me the last one, but I never received it. If you
Did I not send it?
No,
I'll send both. I'll send both because they're recorded anyway, mate. So they'll be on my hard drive.
Oh, okay, please, because if I forget again, I can just check on the video.
Yeah, mate, no problem at all. I'll send both over. I've got another session starting shortly, and then at lunchtime I'll get it sent over to you.
Okay, please. Okay.
No problem. If you've heard nothing by this afternoon, feel free to send me a poke.
I will.
Awesome. All right, mate.
Okay, thank you so much.
No problem, buddy. I'll say shout if you need anything. I'll speak to you soon.
Oh, okay. Thank you. Bye-bye.
Take care, mate. Bye.
Bye. Bye-bye.